A tough year for the diamond industry and for De Beers, but we responded very decisively, reducing our production levels, cutting back on costs, and helping our customers with increased flexibility. And over the course of the year, we reduced rough diamond prices by about 15%. And in addition to try and stimulate consumer demand, we implemented an additional investment in marketing, a marketing campaign in the US and China in the fourth quarter of the year. But overall, the financial results were disappointing. Our overall sales figure was down 34% at $4.7 billion. And of that, rough diamond sales down to $4.1 billion. The volume sold was down very significantly, down 39% year on year, offset a little bit by a slightly stronger average selling price due to the product mix being a little bit stronger in 2015. But all in, the overall profitability was down 58% at $571 million due to that sales shortfall, offset to some extent by the tighter cost control and with some helpful exchange rate movements. Beyond the profitability, we continue to invest strongly, and our capital expenditure was $697 million in the year. Total production in the year was down 12% against 2014 at 28.7 million carats, as we reduced production in line with overall trading conditions. We did that by pulling back on production at the mines where it's most economical to do so. In Botswana, we produced 20.4 million carats. From De Beers consolidated mines in South Africa, 4.7 million carats. From our mines in Canada, 1.9 million carats. And in Namibia, Namdeb Holdings produced 1.8 million carats. We're guiding 2016 production to be in the range of 26 to 28 million carats. In December, we announced that we'd be placing our Snap Lake mine in Canada on care and maintenance with immediate effect. And Botswana made a similar announcement about the plans to put the Damsha mine, a satellite mine of Arapa, on care and maintenance at the same time. In addition, in January, we announced the completion of the disposal of Kimberley mines to an investment consortium between Ikapa Mining and Petra Diamonds. A really tough decision to sell Kimberley mines, but we felt the right decision to sell it to an owner that is best placed to continue operating that mine into the future. '15 was a tough year for Element 6 as well. In particular, the oil and gas industry, which is the biggest element of Element 6's revenue, was seeing some very tough prevailing conditions, and that meant that overall Element 6 saw revenue down about 24% year on year, and clearly that had a significant impact on profitability. Having said that, Element 6 took some decisive action, closing their plant in Sweden and restructuring production in South Africa and Ireland to best place them for the future. We're now focusing our exploration activity on three main countries: Botswana, South Africa and Canada. And in 2015 we reduced our overall expenditure to about $34 million. Whilst we focused on those three countries, we're now seeing some really encouraging signs, and whilst it's still an early stage, we're making good progress. We spent just under $700 million in capital expenditure last year, so a significant investment which reflects our belief and confidence in the long-term fundamentals of this business. A large part of that investment is going into our major growth projects. Gahcho Kué in Canada is at a very exciting stage and will be into production by the second half of this year and is currently about 83% complete. In South Africa, our Venetia underground mine is just over 20% complete now. In Botswana, we're investing in the Cut 8 expansion at Jwaneng, and that's absolutely on track for first production in about 2018. And in Namibia, our new evaluation vessel in Debmarine, Namibia, is just over 50% complete now.